Welcome to the deep dive. Today, we're plunging into something really critical, I think. The investment picture for Nike Inc.
Yeah,
It's more than just stock prices. It's a look at a truly iconic brand facing some serious challenges right now.
that's right. And for this analysis, we're leaning heavily on the Nike Inc. NKE stock forecast. It was published by Stock Telescope June 27, 2025.
Okay.
We're really going to unpack their specific investment thesis from that report. But first, a really important disclaimer from them, which, we absolutely echo.
Always.
This is purely for educational purposes. It is definitely not investment advice. All investments carry risk. Remember that.
Absolutely. So, okay, let's get into that core thesis from Stock Telescope. They call Nike a turnaround story with high execution risk. What does that actually mean for a giant like Nike?
Well, it signals that even with the new CEO, Elliott Hill, and his Win Now strategy, the company's got some pretty severe fundamental challenges under the hood.
Hmm.
And what really stands out is Stock Telescope's recommendation: sell, underperform.
Wow, sell. That's strong.
It is. And consider the stock price, $62.54, trading at almost 29 times earnings.
Yeah.
That PE ratio,
Yeah.
Stock Telescope calls that expensive despite decline. It's like the market hasn't fully priced in the issues. Their 12-month target is way lower, somewhere between $45 and $55.
Okay, and the actual numbers, the financials, they paint a pretty stark picture too, right?
Oh, definitely. Q4 2025, you saw revenue drop 12% compared to the year before.
12%.
Yeah. And maybe even more telling, the EPS, earnings per share, it just collapsed.
Hmm.
Down 86% to only $0.14.
86%. And what about the gross margin, down 440 basis points? What does that tell us?
That's a major red flag. So 440 basis points, that's a 4.4 percentage point drop in their core profitability before operating costs.
Okay.
It means they're either selling stuff less profitably or their costs are really climbing, or maybe both. And this hits a market dominance.
How so?
Well, their global market share actually slipped. It went from 15.2% down to 14.1% in 2024.
So competitors are gaining.
Exactly. You've got Adidas, New Balance, and especially these surging brands like On Running and Hoka. They're gaining ground everywhere.
So you put the financials and the market share loss together. What's happening to Nike's competitive edge? It feels like they're in a tougher spot than they've been in for a long time.
Decades, possibly. And Stock Telescope connects this directly to Nike's own strategic missteps in the past,
Like what?
like the big push into direct-to-consumer. It aimed for higher margins, sure, but it often ended up competing directly with their own wholesale partners.
Right, damaging those relationships.
Yeah, exactly. And combine that with what the report calls innovation pipeline stagnation.
Yeah.
Basically, not enough exciting new products. It just created a gap in the market.
A gap that smaller, maybe more focused brands jumped into.
Precisely. Brands like On and Hoka flourished, grabbing share Nike might have kept otherwise.
So the new CEO, Elliott Hill, has this win now strategy. Focus on sport, repair wholesale ties. Sounds good on paper, but is it actually doable given these deeper issues?
Well, Hill definitely has the experience, but Stock Telescope really highlights the execution challenges. These are substantial.
Meaning it's not a quick fix.
Not at all. Fixing those wholesale relationships, sparking real innovation again, winning back market share, that takes time. The report suggests a multi-year timeline is needed,
Multi-year.
and they say the recovery will be neither quick nor certain. It's a fundamental shift, not just, a new ad campaign.
And then there's the valuation again. It still seems pretty high, right? A forward PE of almost 40. That seems to assume a big recovery.
Yeah, it assumes dramatic earnings recovery that may not materialize.
Uh,
That's how Stock Telescope puts it. They see that disconnect as a major risk.
why specifically?
Well, that high forward PE is basically investors betting big on a rebound that the report thinks is far from guaranteed. Plus, you've got operational problems,
Like,
like record inventory levels, $7.5 billion worth. That often signals demand isn't meeting expectations, leading to markdowns maybe.
which hurts margins even more.
Right. An ongoing channel conflict, where Nike's own sales might be hurting their partners.
Yeah.
It all adds up. The turnaround timeline risk is serious. Full recovery. Maybe 3 to 5 years?
3 to 5 years.
Yeah. So Stock Telescope's base case fair value is pretty sobering. $45 per share.
Wow. Okay, what a deep dive. It really shows the complexities even for a brand as huge and, frankly, as loved as Nike.
It really does. This analysis underscores how even the most dominant brands have to keep innovating, adapting, managing those crucial relationships.
Yeah.
And it raises a really interesting question for all of us, I think. How much protection does brand loyalty actually offer when the financials and the innovation start to wobble in such a competitive field.
That's definitely something for you to think about as you watch the companies you follow. Remember, this deep dive was based on Stock Telescope's analysis as of June 27, 2025.
And just one more reminder, this is purely for informational purposes. Definitely not investment advice. Do your own research.
Absolutely. Join us next time for another deep dive, helping you stay informed and curious.